Hello, and welcome back to our podcast series, Collections Conversations, sponsored by our friends at CNR Software. For today's episode, I wanted to talk about collections as a fintech priority. Now, this isn't common. Most folks working in fintech spend very little time thinking about collections. And yet, I think the fintech ethos, customer centricity, an emphasis on solving problems versus selling products, is actually a great fit with the strategic role that collections can play inside of an organization. And at a time when financial services has never been more competitive, collections represents an opportunity to invest in customer retention and lifetime customer value. But how do you do that? How do you approach building a collections function inside your organization? Should you build everything yourself? Should you buy? What performance metrics should you care about? And how will AI change everything? To answer these questions, I was delighted to be joined on this episode by Ed Wallen, the CEO of CNR Software. Now, Ed and I have known each other for a while, so I knew this was going to be a great conversation, and it was. We covered a lot of ground, including the growth of self-service channels, the importance of data in proactive collection strategies, and the opportunity to turn collections from a churn engine into a loyalty engine. I can't wait for you to listen to it. So without further ado, here is episode 2 of Collections Conversations. Okay, Ed, thank you so much for joining me.
Yeah, thanks for having me, Alex. It's good to see you.
I am delighted to have you. It's good to see you too. It's funny. I think we were joking before we hit record that you and I, we've worked together actually for a long time, both in our current capacities, but also before that as well. And I think we've had versions of the conversation we're about to have, I don't know, dozens of times probably, but this is the first time we've ever recorded it for a podcast. So I'm very excited. Thank you for carving out the time.
Yeah, my pleasure. My pleasure.
So the theme, I think, generally speaking, for this discussion is kind of the fintech playbook for debt collection. And it's interesting because obviously your background is all about everything to do with debt collection and recovery. I spend a lot of my time kind of week to week covering what's happening in fintech and talking to fintech founders. And I find this to be a really interesting sort of fusion of two different perspectives because while fintech has, I think, made a great deal of progress in a bunch of different areas in financial services, collections is an area that doesn't get as much focus or discussion. But I think in some ways it's the most interesting kind of test case for the value proposition that fintech companies bring to the market and kind of how that promise, that brand promise kind of manifests itself. And I think collections is one of those key areas where the rubber actually really does hit the road. So the first thing I wanted to ask you about is that sort of brand promise, right? A lot of fintech companies pride themselves, rightfully so, on being customer-centric.
Yeah.
And, I know you spend a lot of time thinking about this, but in your experience, where does the promise of customer centricity most commonly break when it comes to the collections process? And what have you seen fintech companies or others do to sort of protect and nurture that idea of customer centricity through the collections process and kind of protect the brand?
Okay, great. Yeah, I've seen this along the spectrum from tier one banks all the way through to fintechs.
Yeah.
And it seems to be the customer-centric mentality, if you will, usually breaks down at the exact moment when the customer needs the most empathy and the most options.
Yeah.
It's the collections is the most domain nuanced aspect of the business, and it's also the most highly regulated.
Yeah.
So the experience that you get in a lot of institutions is a very good experience, from very curated, very personalized, we're making you these offers on these products, et cetera, to rigid, generic, punitive, in some cases. So suddenly it turns into the wrong tone, the wrong timing, the wrong channel, and very little context.
That's really interesting. So just double clicking on that for a second. I mean, I agree with everything you're saying, right? One of the things I found really interesting is that I think I actually wrote about this, maybe in a piece that we did with CNR, actually, now that I think about it. But I was kind of talking about this idea that, like, from the company's perspective, they tend to think about it as like our brand promise is manifested in the way we market our products, how great we make the origination experience. Oh, welcome to the, being a customer of ours, the relationship. We're so excited to have you. And like that's where when they think about customer centricity and like having a really like intimate relationship with their customers, that's almost like the mental picture that they like kind of place on it. And it contrasts very differently from the customer's perspective, right? Which is, if you think about it from the customer's perspective, during the shopping process, they actually haven't really emotionally committed to any financial services provider, right? Like, even though it doesn't feel like that to the company, from the customer's perspective, you are one of like six different options that they're considering. Usually they're weighing those options in a pretty sort of like objective way where they're looking at different components of your product, your pricing, all these different things, and they select you. And that is them sort of making an initial choice. But again, from the customer's perspective, like, you haven't really done anything as a brand, right? From your perspective, you're thinking, wow, we've been selected. This is great. Like, the customer chose us. But really, from the customer's perspective, like, they are picking you and they still don't really know you at all. Where the relationship gets built and where the trust gets built is when something, as you said, goes wrong, right? Like when there's a problem and they need some level of empathy. And I have experienced this personally as a consumer, and I've seen it a lot in the industry, where suddenly when you have an issue or a problem, the tone, as you were saying, shifts completely, right? And I think it's actually very like discordant to the customer, where it's like, we're friends, we're friends, we're friends. And then one thing goes wrong. There's one little hiccup. A lot of times, by the way, when it relates to like lending or things like that, it's not even something in the customer's control, right? It's like a cash flow issue or some unexpected thing
Right.
happens, a medical bill.
Government shutdown.
And
Right.
right. Yeah, government shutdown. Like, no one, like, just a thing happens externally. And I think they find it very off-putting when the tone and timing and approach of communication with the company completely shifts. And suddenly it almost feels like you're hearing from a different part of the organization that doesn't speak in the same language, that doesn't seem to value the relationship in the same way, whose objective is maybe more focused on fixing a problem for them rather than fixing a problem for you. And
Right.
I think in the piece I wrote, I kind of talked about like that's where the brand promise is either realized or broken.
Right.
And I guess a follow-up question for you is, why does that happen? Like, from the company's perspective, why is that very common that there will be that like abrupt shift in tone and tactics and relationship when you get to that point in the customer relationship?
Yeah, it's very much a disjointed group that's handling the collections at that point. It's thrown over the fence. And so you get kind of I'd say the Apple experience of the onboarding. Everything's, sunshine and rainbows. But then you get the Mad Max in collections.
Yeah.
So it's really about, to interact and really protect the brand and keep that intact. It's meeting the customer on their channel of choice. So whatever that is, if it's SMS or WhatsApp or if it's phone, whatever they actually use. So it's really knowing your customer. And so if they engage in app, then don't force a call. If they want a human, make it easy and fast to get to a human and make it respectful. So it's really making the whole process frictionless as possible and sticking to the brand values and brand identity that got you the customer in the first place. So the self-service works very well, but it has to have clear balance and clear next steps and make it very easy. So instant plan setup, easy to change dates, and no please call us dead ends and spinning into like an IVR hell.
Yeah. Yeah.
So, and so that it's that in combination with today we've got so much data, and we can make use of that data to really hyper personalize that path back to good standing. So, for instance, whether it's a let's say not just a dear customer, you owe us this money, but based on really tailored options that are based on their history and situation, whether it's a human-to-human conversation or if it's a clean self-service plan, the win is getting them restabilized, not putting max pressure on day one when they missed payment.
Right. No, that makes a lot of sense. I mean, and it's interesting because and this has come up in previous conversations we've done in this series as well, but it is also interesting, like what the trigger is for this, phase of the relationship and like how that drives behavior, right? Because one of the things that I've noticed that I think is really interesting is on the reactive side, like, okay, you missed a payment or something has happened. Like if a customer is reaching out to you, if they're contacting you proactively, well, like they're doing a lot of the hard work of like taking the initiative first. And, one thing I can say personally, having gone through versions of this a couple of times in the past, is I'm always very frustrated when, as a customer, like I'm trying to do the right thing. I'm trying to be proactive in managing this problem. And I feel like you're throwing up walls between me and trying to get my problem resolved. Right. And so to your point about like, don't make it harder for them than it needs to be. Like if it's self-service and I know exactly what I want to do, just let me do it in the channel of my choice and don't get in my way. If I have a question and I make it clear that I have a question, like enable me to answer that question as efficiently as possible in the way that I want to, which might be talking to a human, might be going to a set of FAQs, like just get me the right answer as quickly as possible. And I guess on first on that kind of like proactive note, when a customer is like engaging, how have you seen companies sort of better understand and like build like the infrastructure so that they can enable customers to just solve their problem right away? Because that to me feels like very low hanging fruit from the perspective of, if they're taking the initiative, a lot of the hard work and the risk of not getting paid back is already dramatically reduced. You just need to not get in their way or screw anything up.
Right.
Like, what do you see brands doing there?
So it comes down to tracking how they're interacting when times are good.
Yeah. Oh, sure.
Yeah. And then leveraging that within the collections process so that you already know as an organization what they're going to want. So that you can give them just a simple, if they're a Gen Z, or you can give them a simple text message
Totally.
that's, or WhatsApp or, Telegram.
Well, and that's a great point. I'm sorry to interrupt, but like just to double click on that, like it is weird now that I think about it that brands will be like, "Oh yeah, we're communicating, you're letting us know what's going on, we're doing servicing or other parts of the relationship." And then all of a sudden when it gets to collections, like it has to be a phone call or it has to be like it's weird how you just assume that the way this person who wants to communicate in these ways, that's not true. Once it suddenly magically crosses this barrier, it kind of speaks to, I guess, that siloed throwing it over the fence idea you mentioned before, where it's like from the customer's perspective, and tell me if I'm getting this wrong, but from the customer's perspective, there's not that much difference between one day early and one day late. Like it's all just like my life that I'm living and like, balancing different priorities.
Right.
But it triggers this like weird change in behavior in the company you're working for, where all of a sudden like, oh, you're now not this, you're this, and that means we play by a totally different set of rules.
Right. And in a lot of cases, the collections side of the house doesn't get the budget that the originations and marketing do.
I know that to be true. Yeah.
And they're operating on some pretty old tech and some pretty old manners, and just haven't adapted to change.
That's really interesting. And I guess then tying it back to fintech companies specifically, the other thing that I actually think is a big opportunity, but I would imagine it requires thinking about it the right way, kind of from the start to a degree, is, fintech companies tend to be very like data driven in the way they approach stuff. And, I would say compared to larger sort of incumbent institutions, they tend to sort of think almost from like a data first principles approach of like, we need to make sure everything we're doing is instrumented. We need to make sure every system that might need to talk to another system has an ability to do that. And there's sort of an open architecture and our systems can kind of snap together and talk to each other. So there's sort of this like data first principle in terms of system design. And it ties to the other part of, I think, the challenge that I see a lot in collections, which is, okay, so let's say the customer isn't reaching out to us, but we want to reach out to them. That to me gets to, again, this idea of like, are we being reactive or are we being proactive? And I think you and I have talked before in the past about how weird it is that we call like pre-collections, in the sense that it's like, yeah, we're going to try to reach out before you have a problem. And I think it's one of those practices within collections that we have never done a great job with historically, because it tends to be a more reactive sort of operationally focused business. But do you see, especially with fintech companies and their sort of focus on data, a move to being more proactive and letting the data about a customer's financial life or what's happening in their finances sort of proactively drive like outreach and help before these problems happen?
Yeah. So the best ones are. And so
Mm-hmm.
what you're doing is you're looking for signal, right?
Mm.
So the signal meaning if they have a direct deposit coming from their employer that
Yeah.
shows up on the 15th and the 31st of every month and then all of a sudden
Mm-hmm.
drops off, or their average balance drops, or credit card utilization spikes and they were paying it off or making more than the minimum payment, but now they're just making the minimum payment. You can usually get that signal before the delinquency turns into just a spiral.
No, that makes sense. And I guess the benefit to doing that is the further you get ahead on that, the more you can kind of head off potential problems or just get to a point where like there is a path to resolution that doesn't require as many like hard trade-offs or hard decisions. Like the later you let this stuff go, just mathematically, the harder it is to kind of fix
Yeah.
the problem, right?
Right, because the interest builds, and
Yeah.
then you also get late fees, and so if you can get that early detection and
Mm-hmm.
maybe make an offer,
Mm-hmm.
if they do confirm that yes, indeed they are in some financial hardship, make an offer there before they go into that collections world and have some sort of a workout there. That goes a long way with building brand loyalty.
Oh man. Yeah, I can only imagine. One, and I guess the other thing I wanted to ask you about there is, and this is probably more relevant to lending, I would say, because a lot of you and I've talked about this in the past, but like lending is one of those topics where, once you get the loan and you're using it for whatever you're using the loan for, in some senses, the lending product itself kind of retreats a bit in your mind, I think, as a consumer. Like, I got the TV, I got the house, I got the car, whatever. Like, I'm making my payments, but I don't think of this as like a very active servicing relationship.
Mhm.
Like, it's just something that
It's
auto debits from my checking account. Yeah, like it's on autopilot in the background. How have you seen companies sort of like solve that? I guess I'm trying to think of the right way to say it, like customer engagement issue of, because it's a little weird if like you just all of a sudden appear and go, hey, before you've missed a payment, we think you might miss a payment and we would like you to not miss a payment. Like, that's a strange out of the blue engagement if you're just reaching out to a customer.
Mhm.
I'm sure there are ways that brands think about like, how can we do that in a way that's not awkward or weird, but is helpful and value added? How have you seen people navigate the sort of customer experience or customer communication part of that approach?
Yeah. So some of the more forward-thinking fintechs that are out there are they're doing things like giving small rewards, like whether it's a Starbucks card or you know, little things that
Mm-hmm.
are of value to the customer for being a great customer. And so, but keeping that engagement, that's
Yeah.
the thing. It's not just, originating the loan and then
Right.
we don't talk
Disappearing. Yeah.
until
Right.
there's
Right.
a problem.
Mm-hmm. No, totally. Yeah, I mean, it's reminds me a little bit of like, when you're talking to your parents and it's like, if I only ever call my dad when I have a problem, like that's a very different type of relationship than,
Right.
just talking on the phone regularly. So I think your idea about like customer engagement is really important. I also, and this maybe ties into Spring 4 and some of the other sort of investments you guys have made over time, but like, how do you sort of help or how do companies help make that discussion more of like a broader financial health discussion rather than just very narrowly like here's what we need you to do to pay us back? I mean, how do you sort of broaden that discussion beyond just the mechanics of you missed a payment, how can we get you current, to like, hey, what's going on in your finances broadly, and like where are the places where we could add value? This episode is brought to you by CNR Software. More than just debt collection, CNR sets the global standard for AI-native humanized credit management. They simplify the complex with technology, built for modern financial services, delivering end-to-end credit risk lifecycle support powered by automated workflows, AI-native intelligence, and real-time data-driven decisioning. Learn more at crsoftware.com.
Yeah. So, I guess, certainly what we've talked about in different starting points. They're starting earlier,
Mm-hmm.
but also just education. So
Yeah.
if they're not in collections yet, but
Mm-hmm.
you've detected that signal that there may be hardship, educating them on what other programs are out there that they could take advantage of.
Mm-hmm.
So social safety net programs, uh, based on who they are as a person, they may qualify for uh, different state programs here in the States, or
Mm-hmm. Mm-hmm.
if they are, uh, let's say, Native American, there's all sorts of
Mm-hmm.
grants and funds and things that are available to them. If they're in the military,
Sure.
there's all
Sure.
sorts of laws that are on the books that afford them things like forbearance or skip payments.
That's interesting. And that's kind of what Spring 4 does, right? Is provide more of those kind of resources that you can help give to lenders that they can pass along to their customers to broaden their options, so to speak.
Yeah, it's really amazing in terms of what Spring 4 has done for our client base, and
Mm-hmm.
um, it's really about stabilizing the household, stabilizing the cash flow,
Mm.
and stabilizing that repayment behavior.
Yeah. Yeah.
And so, there are many common categories that people fall into in terms of why they've missed their payments.
Mm.
So there's, employment,
Mm-hmm.
there's, birth of a baby,
Yep.
like I said, government shutdown,
Yeah. Yeah.
macroeconomic things that happen.
Mm-hmm.
And there are many resources that are out there for exactly that. So there's food
Yeah.
assistance, there's employment resources, there's rent and housing support, there's heat and utilities assistance, and there's so many things there from the Spring 4 massive amount of data curation that we have
Mm. Mm-hmm.
that really truly makes it a win-win. So they're getting back on the path to financial well-being while being able to also satisfy these financial obligations that they have. So there's, Spring 4, we do a great job of publishing a lot of those stats because
Mm-hmm.
we do a lot of attribution there, and we've got
Sure.
objective data
Yeah.
that
Yeah.
we can show that in the referrals that we have there
Mm-hmm.
through Spring 4,
Mm-hmm.
what those have led to in terms of success stories with the individuals that are in need. And a lot of those, we've got so many personal testimonials from real people that really help them in a time that was very difficult in their
Mm-hmm.
lives to get through.
Mm-hmm. Yeah, I really like it. I mean, I think I wrote about it when CNR Software acquired Spring for a couple years ago, right now, two,
Yeah.
3 years ago.
Yep.
And I loved it because I obviously knew you guys and I knew Rochelle and the Spring 4 team as well. But I think one of the challenging things about financial health and some of the things we're talking about is that it can sometimes feel a little like abstract and sort of like corporate responsibility type stuff, which is important, but oftentimes doesn't get like budgetary focus and isn't just sort of seen as like a strategic priority, right? And the thing I like about the combination of that, those sets of resources and collections is like, no, we're not asking you to think about this as like charity or just a good thing to give back to your communities or your customers. Like, this is a strategically valuable tool in the toolbox to help improve your customers' ability to pay and
Mm-hmm.
sort of financial resiliency. Like, this will drive results for you and also create like stronger consumers and like better citizens and all that kind of stuff. Like, it's good in a macro sense, but like just tactically, it's a tool you would want in the toolbox. Is that the sort of response that you guys have been seeing
That's
in the market
exactly
to it
it.
as
Yeah,
well?
it turns a collections problem into
Mm-hmm.
a life happens problem.
Yeah,
So
that's a good way of putting it.
if I could say it's less like Judge Judy, and it's more
Mm-hmm.
like Friday Night Lights. So
Right, right.
it very much leaves the consumer feeling or the customer feeling
Mm-hmm.
like you really care about me and
Yeah.
you're trying to help me.
Yeah. Yeah. No, I think that's huge. And it kind of ties to the other half of what I wanted to talk about in this discussion, which is from like a company executive perspective in terms of building out a collections function. And again, I'll sort of anchor on fintech since that's kind of the world that I come from. Um, I guess I want to start at the top and then kind of work our way down. So when a fintech company is thinking about building out kind of a collections function,
Mhm.
I think maybe the first thing that I would want them to think about, I don't know if they do, you can tell me or if they do or not, but the thing I would want them to think about is how does collections sort of impact our overall business? And I think this is actually very important, right? Because it informs the metrics that we care about. It informs sort of how we think about it from a resource investment perspective. As you were saying, like origination is such an easy
Mhm.
thing to invest in because like better origination equals more growth. More growth is what I want because more growth drives more revenue. Like it's just a very easy, like mental sort of model to have. Whereas I think with collections, I've written about this before that like the narrow view of collections from an executive perspective is, well, these are already customers who I'm probably going to lose money on. So I'm being dealt sort of a losing hand. And my goal is just to like minimize my losses and
Yep.
move on from
Yep.
this hand. And I have never felt like that's the right way to think about collections strategically. And so I'm curious, like when you talk to executives about how they should approach thinking about collections as a function and like what sort of strategic value it has to the organization and like what metrics matter, what do you talk about?
So I talk about how, um, well, first off, to go back to where you started there.
Yeah.
Additionally, leadership looks at collections as a cost center,
Yes.
and they just want to squeeze whatever dollars they can squeeze.
Yes. Yeah. It's
Um,
like let's do this and let's do it in the most operationally efficient manner possible, which is why you tend to get things like I mean, I'm going through some of the classic collections metrics, but it's like roll rates, call
yeah,
volume,
right.
the promises to pay. Like you look at like very specific kind of operational metrics, and you basically think, am I squeezing as much out of every dollar I spend on this as possible?
Yeah, exactly. And that mindset really misses the mark.
Mm-hmm.
The collections is often the most emotionally intense moment
Yeah.
of the
Yeah.
customer life cycle. And
Mm-hmm.
so you can either treat it as a
Mm.
loyalty engine or you
Mm-hmm.
can treat it as a churn machine.
Yeah. Yeah.
Like that's really the
Those are the two decisions. Yeah. That's the path.
yep,
A or B.
A or
Mm-hmm.
B. A or B. So, and the part that they get wrong is replacing customers is very expensive. So,
Totally.
depending upon the segment and the mix of the customers that you have, a new
Yeah.
banking customer is, at least here in the U.S., it's often cited in the hundreds of dollars, and I've heard
Yeah.
even up to 500 plus
Yeah.
showing up in industry discussions to replace that customer.
Totally.
And so then you have to go back and lean on value props like bonuses and incentives, which you're basically trying to buy customers back. And it
Right.
takes a long time to then realize get the return on investment in those plays. So if you can keep an existing customer through a temporary hardship um, without destroying the relationship,
Mm-hmm.
you're not being nice. You're protecting their lifetime value. So
Yeah.
yeah, and hardship is usually temporary. So,
Totally. Totally.
but you want the customer relationship not to be temporary.
Right, right. It's a great point, right? Because I mean, and just to underline a couple of things you said there, because I think they're really important. I mean, one thing is the cost to acquire customers is just going to keep going up,
Oh yeah,
right? I mean, like there's no way to look at the financial services industry right now and be like, yeah, I think it's going to become less competitive over the next 10 years. Like, there's just no, that's not a realistic expectation. Like, there's just so much more money and competition coming in from every vector in financial
oh
services
yes.
trying to peel away customers, right? Like, one of the things that's a big debate and discussion these days is, like, should stablecoins be allowed to offer yield? Well, really, that's a discussion of, should you be allowed to funnel money into customer acquisition to peel customers away from banks or fintech
Mm-hmm.
companies if you're someone who's providing stablecoins or
Mm-hmm.
a stablecoin based financial product? Like, and regardless of how that regulatory fight plays itself out, I think inevitably we're going to see more money poured into customer acquisition. So your costs just go up hugely there. The other
Mm-hmm.
thing that I think is really important, and maybe I don't know if you have a comment on this, but the unhappy customers ripple in a way that's not great for you, right? And so I
Oh
always
yeah.
think about it as like good customer experiences lower your customer acquisition costs because you have happy existing customers out there saying nice things about you, right? And so this is one of those things that's very difficult, I think, for a CEO sometimes to like measure or get good data on, but I think it's also one of those things that we know intuitively is true. Like, you have to spend way more on advertising and rewards and incentives and other things to convince a customer who either doesn't know you from a hole in the ground to
Mm-hmm.
trust you and to become a customer, or who does know you because someone who you used to work with has been saying bad things about you to them over drinks, and the only thing they've heard about you is bad. It's not that you can't overcome those challenges and still acquire that customer, but like, they are going to be more expensive and they're going to be more likely to sort of flee or to move on or to be easy for someone
Mm-hmm.
else to pick off because there's just not that like strength of relationship. Whereas, if you, again, I love the idea of thinking about collections as a loyalty engine. If you think about it as a loyalty engine, coming out the other side of hardship, you should have better customer relationships, deeper customer
Right.
relationships. And that should not only like, extend the lifetime customer value of that customer, like, it should lower your customer acquisition costs because they'll be out spreading the good word about how you help them.
Exactly. Exactly. Yeah. So if you can help someone through that period of hardship
Mm-hmm.
instead of treating them like a liability,
Mm-hmm.
uh, you get a customer, generally speaking, for life.
Yeah.
And
Yeah.
and so and like you said, with kind of that brand spillover risk,
Totally.
The collection horror stories, they spread so much faster than all the marketing that you can possibly do.
That's right.
Yeah.
That's right. No, I think that's exactly right. And it's just like that's a story that you have some control over, right? It might not seem like it. That might not be the way you think historically about collections, but like you have some control to determine how that story plays itself out. So, operationally, how does that manifest in terms of like metrics that folks should care about, right? Because I do, you know, I'm saying all of this maybe in a slightly over dramatized way. Like operational efficiency still matters, right? So I'm not saying like you shouldn't care about those things, but how do you see for organizations that kind of grok this and like are thinking in this way, how do they approach thinking about like metrics differently than like a standard collection shop might?
Yeah, so it is a lot of tracking around retention, tracking around what are our touch points with our customers. Of those segments, you know, what have we done in the past in terms of where the good outcomes have been, where the bad outcomes have been, and then, you know, really trying to put the best collection strategies in place to help the customers stabilize so that they don't boomerang back into collections.
Right. Right. Well, that's a good point too. I hadn't really thought about that, but the idea of like we've solved your immediate problem, but we also want to like stabilize you so that this doesn't reoccur 2 months from now. I think that's a really good point because I sometimes think about it as like financial precarity, you know, where it's like we've moved you away from the very edge right here, but like we don't want you to just not be falling over a cliff. We want you to be well back from the edge and in a good place. And so like the idea that just because like they're now making their payments again doesn't mean the job is done, I think is a pretty key idea and something that not all organizations think. The other thing that comes up a lot in fintech, and it's kind of I would say fintech companies' greatest strength and also greatest weakness, depending on the circumstances, is fintech companies are very much kind of build it themselves, I think, generally speaking, and that's how they differentiate themselves, particularly from a technology perspective. Where do you see that attitude sort of having an effect, positive or negative or both, when it comes to collections? Like, where does it make sense to kind of build yourself? Where does it make sense maybe to not? And like, how do you see fintech companies navigating that decision?
Well, it's I think they underestimate how uniquely hard collections is. So
Yeah.
it's like saying, you know, building collections from scratch. I like to say it's like we'll build our own Marvel universe. You can, but the continuity errors will absolutely kill you.
Oh, that's interesting.
But there's so much domain nuance, and you have to have compliant treatment at scale across every exception case under the sun. And there are laws for things like, you know, like I mentioned, military deployment, but there's also laws for, you know, all sorts of other aspects of life. So like, for instance, if this is a death, if this is when someone has been incarcerated, if this is, you know, when someone has declared bankruptcy, there's thousands of different exception cases that you have to then manage at scale. And that's really hard for anyone to build from the ground up and decide how to treat each one of those exception cases. And it's got to be based on the situation, the vulnerability, the hardship signals, the regulatory constraints. It's not just, you know, snapping together workflows on, you know, your platform of choice. It's judgment that's encoded into strategy that also has all of the deep domain logic that has to be there. And to your point earlier, it's not just the escalation steps, it's a recovery journey that balances the firmness with dignity and gives real options that are attainable and aims to get them back into that status of good standing.
Yeah, that's a great way of thinking about it. I mean, I would almost reframe it to you as this idea that like some areas of technology investment, there's like a low barrier to entry, but
Mm-hmm.
then sort of a relatively low ceiling in terms of like, so if we do this at the bare minimum, it's going to cost us X. If we do this in a way that's exceptionally great and best in class, the value to our organization is Y, right? So sometimes it's like low floor, low ceiling. Sometimes it's low floor, high ceiling, and sometimes it's high floor, high ceiling, right?
Mm-hmm.
And I would think of collections as sort of being high floor, high ceiling, maybe in a way that, especially if you're in fintech and you've never really wrestled with collections before, you might not appreciate what you just described, which is the floor for doing it compliantly is really, really high because there's a ton of different exceptions. There's a ton of different edge cases and like weird things that can happen. It is emotionally charged, to your point, right? So
Mm-hmm.
like if you want to see like a bad customer experience that can escalate into like a state AG calling you pretty quickly, like
Right.
that collections is where you're going to see that,
Right.
and so like that's going to happen. But then I think the other thing, going back to our earlier discussion, that organizations also don't appreciate is they might say, okay, well, it's a high floor, so maybe we don't want to build all this ourselves. Maybe we just want to like outsource it and pick the cheapest provider to just sort of give us like the bare minimum. This is compliant, and we just won't worry about it. But going to our earlier discussion, that misses the point that it's also a very high ceiling of what you can build on top of that. How do you see for organizations that sort of understand this is both a high floor and a high ceiling business, how do you see them like picking the different providers to work with? And like when they pick a provider to work with, how do you see if I'm a fintech company and I want to say like,
Mm-hmm.
I want to take your expertise at doing this in a compliant way, but then I want to add my own differentiation on top of that and build an experience beyond that that
Right.
like really realizes that value we've been talking about. Like how do they navigate that?
They need to find vendors that are able to understand how they show up in the marketplace to their customers
Yeah.
across the life cycle and be able to
Mm-hmm.
mirror that within the collections process, as opposed to just outsourcing it to a bunch of different collection agencies, and then you roll it, you pull it back in and then send it back
Mm-hmm.
out to another, so on and so forth.
Yeah. Yeah.
Secondary, tertiary, quad, and so forth. But yeah, I think the from the fintech's perspective, it's not the tech that is the issue. It's the operating model complexity. So it's the data integration and the channels.
Mm-hmm.
That's a commodity
Sure.
these
Yeah.
days. It's the real pain is the strategy management, the segmentation, monitoring the outcomes, doing the QA,
Yeah.
having the evidence in terms of showing compliance, being able to show a regulator that you're actually treating each and every customer in a compliant manner,
Yeah.
and
Yeah.
then keeping the decisions consistent regardless of what channel or what medium you are interacting across, whether that's a human, whether that's an IVR, whether that's an AI bot, whether that's self-service portal, all of those.
That makes a lot of sense. Before I let you go, Ed, it's 2026, which means legally, constitutionally, I'm not allowed to not ask you about AI in all of this. So let's talk briefly about that. How do you think AI kind of reshuffles some of these things that we've been talking about? Because I think one of the key ideas we've been kind of circling this whole discussion is this mindset shift from the sort of churn engine to a loyalty engine, right? And there's a lot of components to that, right? There's an operational efficiency component, there's a digitization component, there's a personalization component, and a lot of those components are, I think, already being affected and will continue to be affected by AI, and in particular, like generative AI, large language models, these kind of pieces of intelligence that we can kind of drop into different places. I know it's still early, and I know collections is highly regulated, so I would expect the thrust of this to hit collections a little later, maybe than it hits other areas. But early days, what are you sort of seeing in this space?
So I like to give the analogy of a Tesla.
Okay.
And basically what that looks like is, if you were to put a Tesla, let's say in an open field, and then turn on self-driving, there's no telling where you're going to go.
Yep.
Right.
Yep.
So no telling what decisions it's going to make and how it's going to interact with the customer. So you're still going to need expert rules that are thou shalt not, or thou shalt always do this. And so in that case, that's providing us the road with the guardrails so that now we can actually do self-driving and, hopefully have no accidents.
Yeah.
And so, it's the I guess in 2026, it is less Terminator and more Iron Man suit. Okay. So you're tech assisted, context aware, and still human controlled. Human controlled with the expert decisions when it's self-service, and also, human controlled and human assisted when it's, AI then generating a call script or saying, here's what we should do as the next best action based on all of the regulations that we've consumed and vectorized, and then put the LLM on top of that.
That makes sense. I mean, a couple of things there just real quickly. I mean, the deterministic element of, whether it's AI or humans, the regulations say these are what we can do and this is what we can't do, and like we can't ever screw that up. So there is like a deterministic wrapper around, or guardrails, as you were saying, any intelligence that we put into this process, whether it's humans or AI, right? Like we struggle with the same thing with humans, right? We don't want a human being to get on a call with someone as it relates to collections and say X, Y, or Z. That causes us a problem just the same way it would if AI is communicating to the customer and makes a mistake. So like the guardrails we've already developed to wrap around human intelligence, it sounds like they apply reasonably in the same way that they would for AI as well. The other element that you touched on there that I think is interesting is just this question of like almost where can it add value, right? And to your point about it being sort of AI assisting humans, and maybe this is where we can wrap up. I mean, I think with AI and with digitization or whatever, I actually strangely am optimistic that like collections is going to become more human over time. And I mean that in kind of the highest leverage way, right? Like we're not going to have humans wasting their time dialing a phone number where there's no chance the person is going to pick up. We're not going to have human beings like pouring through case notes and trying to understand the entire history of something by looking at like raw data. Like we're going to have summarization. We're going to have AI assisting in all of these places. But like, it wouldn't totally shock me if the outcome of a lot of this is that the collections process becomes like incredibly empathetic and more like humans helping humans solve problems. And going to our earlier point, like where a lot of differentiation is created for brands, and AI helps us get there faster and helps us do that in a cost-effective way, but that like strangely it becomes more human as an output out of all of this. What do you think of that theory?
Yeah, I completely agree. So it's like I said, it's the AI plus the expert rules, but it's the AI can summarize the account context, the customer context, suggest compliant language for if there's a human to human interaction, or if that's through some sort of a self-service, and then prompting empathy shifts for sensitive topics and helping the representatives when in those human to human interactions stay consistent. So that's that real-time guidance and tone adjustment, and then also the policy and knowledge access while the rep is right there and they've got it all right there at their fingertips, as opposed to having to get years of experience or having to refer to policy manuals. And then it leads to faster, from the organization standpoint, faster handle times, which is a metric that is often tracked very closely.
Yeah.
But from the customer standpoint, you solve the problem more quickly.
Right.
And then in those self-service scenarios, it presents, what are my options? What happens if I pay on Friday? Can I change my date? And just have that interaction very fluid with the end customer, so that they don't feel like they're, like this is something that is burdensome, and dealing with like government organizations where you've had to call into. So I'll pick on, DMV, the Division of Motor Vehicles. Like that's
totally,
yeah.
It's not what this experience should feel like, right. And it's certainly not the thing that will differentiate your brand. So that's what we want to build away from. And I agree with you. I think AI will help us get there faster. Ed, that's a great place to end it. Thank you so much for carving out some time for me. As always, I enjoy talking to you about this topic.
Yeah, likewise, Alex. Really good to see you.
You too. Thank you. This episode is brought to you by CNR Software. More than just debt collection, CNR sets the global standard for AI-native, humanized credit management. They simplify the complex with end-to-end credit risk lifecycle support, powered by automated workflows, AI-native intelligence, and real-time, data-driven decisioning. Learn more at crsoftware.com.